This is problem 9A4 right out of the textbook. I'm not sure if it's assigned. However, it introduces the notion of companies that sell merchandise that are subject to a sales tax. So what you have here is this cosmetic market being imposed a 16% sales tax to the customer. So the customer not only has to pay the price of the merchandise, but also has to add on another 16%. That's a whopping amount of a sales tax. Nonetheless, we'll show it in journal entries below and how to calculate and how to record sales of a company who collects a sales tax. First of all, they get started in the exercise here by having the owner of the business, Chevy Canton here, investing $9,500 in his business. So that's a throwback really to chapter 1 or 2. So we need to add to cash and add to capital by debiting cash and crediting capital for the first transaction. Now he gets involved in selling. Scroll that up. His registered sales tapes were $4,600 plus the sales tax. So I've got to add 16% to the 4,600 to determine the cash collection. This is a cash deal, okay? And we're selling lipstick. So the entry would be to take the 4,600. So we'd use the calculator over here, 4600, and we would calculate the percentage of 16% times 0.16, and that sales tax adds up to $736. Now, the $736 is included or added to the 4,600. The 4,600 is the revenue. The other 736 is owed to the state, but we're holding all the money. 5336 is the money that we hold, of which we earned 46, and the other 736 is a liability that needs to be paid to the state government. So we can see what's going on here. While we hold the money, we got the money, but the most we can record as revenue that would affect our income statement is 4,600. And until we pay the state the sales tax that we collected from the customer is a liability to us. That's why we credit sales tax as payable over here. Okay, so the next 3 transactions are identical, except the amounts are different, and you have registered tapes for eyeshadow, and then again for lipstick, and then again for eyeshadow, but they're all the same in nature insofar that we have to collect the sales tax. So the tapes show 1900, so I'll show you that you can take the 1900 and multiply it actually to get the total amount. I'll show you 1900 times 1.16. What I just did is I multiplied times 116% to get the total cash, and you can see that that's 2204. So if you calculate the whole kit and caboodle like I just did, you can just back the 1900 out of the 2204 and plug in the sales tax, which we know is $304. We can certainly do it that way, or we can do it the hard way, or the longer way, or the more procedural way would be to take the 1900 and figure out how much 16% is times 0.16 equals, I should be on my calculator here, okay, equals $304, at which point, again, you'd add the 304 to the 1900 to come up to the 2204. Again, the larger picture is that we've got all the money. We don't own it all. We own 19. That's our revenue. The other 304 is a liability, crediting the amount to the sales tax payable account, and however often we have to pay that to the state, say monthly or at least quarterly, we have to make a payment to the state of, I don't know who the heck charges 16%, but that's a lot of money. Okay, and the next one I could do the same thing. I could get again, we collect the whole $638. We calculated the $88 as the sales tax. The 550, we show you right over here, 550 times 0.16 times 0.16 equals, and that's the amount of the sales tax. The 88 bucks is added to the 550 to get the 638, and that's how much Lois Kozak owes us. These are all, that was a credit sale. Okay, that the first one that we did, I won't back up, but the first one we did was a cash sale. The second one we did is a cash sale over here, and now this one and the next one are credit sales, which means, of course, that we're not getting the money now, but we still owe the $88 to the state. No matter when we collect the money. If we made the sale, ultimately we have to pay the state the $88 for the sales tax, and can only record the amount of revenue that we receive. Not the revenue here is not 638; it's 550. So that goes to our income statement. That goes to our balance sheet. Same over here. We added 16% to $1,600. We added 16% to $1,600. I'll do it the fast way. $1,600, 1600 times 1.16. So we're using a multiplier of 116%. To get the gross amount, the total amount is $1,856, and you can see that once you know that that's in there for $1,856, you can only record $1,600 is the revenue. The other $256 has to be the sales tax. Of course, the sales invoice or the sales ticket would certainly break it down exactly according to the numbers that show eyeshadow sales to Anne Marie Maxwell for $1,600 plus sales tax, ST, you might see, sales tax at $256, and Miss Anne Marie Maxwell owes us $1,856. Okay, so those are three more sales entries, and we're bringing on two credit sales here, which obviously we need to keep track of the people that owe us the money in our subsidiary ledger for accounts receivable, so that we keep track of who owes us how much. And when it comes time to send out a bill, we look at our accounts receivable ledger to find out who owes us how much, and then we send them bills accordingly. And we also note here, classify our sales. It's a departmental thing, so we keep track for both management's sake and the owner's sake. And for our income statement, we break down the sales between eyeshadow and lipstick. That's our business, so we sort of departmentalize the operation, and we can find out which is the more profitable by breaking out the sales for each one. Okay, hang on. Okay, so we'll pick up over here. On the 15th, we issued a credit memorandum to Lois Kozak for $250 of lipstick, which she returned to our company. Now, of course, when we charged the $250 for the lipstick, we also added the 16% sales tax to the $250 and included it as part of the account receivable from Kozak. But for the fact now that she is returning $250 worth of that merchandise, we not only have to reduce the revenue, but we have to reduce the amount of accounts receivable by the total, which includes the sales tax. tax. So Lois not only does not owe us the $250 for the merchandise, she does not owe us the $40, which is the 16% of the $250 of merchandise that was returned. But that debit to sales returns and allowances, that's a contra revenue account. Okay, whatever the revenue was, the $250 is going to be subtracted from it when we prepare our income statement. So I suppose I could go back up there and just show you the revenue from invoice, that was Kozak, right? And there it is right there, okay? So there's the Kozak receivable. $250 of the revenue is being wiped out by the $250 debit. So the $550 is the revenue, and $250 of that is being wiped out by that debit to sales returns and allowances. And of the total sales tax that was charged, okay, which was over here, which was $88, okay, $40 of that, Kozak does not have to pay to us, nor do we have to pay it to the state, because it's a return of a prior sale. So you see, you debit sales taxes payable, that reduces your obligation to the state for the $40 that was tied to the $250 sale. And here you see you're cued to do that in your exercise. Be sure to reduce sales tax payable because of Chevy's return. Okay, I hope you understand that. You can go back and forth on it if you don't get it immediately. And then the final amount owed to us, whatever amount owed to us, actually only half of it is being paid. That's from Ann Maxwell. Let's find out how much the total was. And the Maxwell sale was $1,600, but she owes us $1,856, so she's paying us half the sales tax and half for the merchandise, so that we can see that if you divide the $1,856 by 2, that's 1/2 exactly of the $1,856 above, and that is $928. Nothing complicated at all about that, just simply debit cash, because that's a cash collection, so we're adding to cash, and we are reducing the receivable from Maxwell. Okay, so the next two are credit sales, a lipstick sale and an eyeshadow sale to the two customers, Parnell and Everett Tennis Company. And you can see, without me going into the arithmetic, they are just like the other credit sales where we had to add the sales tax to the $400 in order to get the total receivable. So 16% of $400 is $64. So we're going to add that to the $400 so that Parnell owes us the total of the sale plus the sales tax, of which $64 has to be paid to the state. So we again can only record the $400 as a revenue to our income statement. The $64 is a liability to our balance sheet. We have to pay the state that amount, and of course the receivable, an asset to the balance sheet for $464. Pretty ditch ditto down here, except that we're selling eyeshadow, and the revenue, or the sales ticket price, or the invoice price, is $550. The invoice price is $550. We take 16% of $550 to get $88. How much does tennis owe us? The total is $638. We calculate first the 16% of the $550, plug in the sales tax for $88, recognize again that the revenue component is to the revenue account and the sales tax component is to the liability account, all of which is owed to us by Everett Tennis Company. Okay, we issued our second credit memo here this time to David Parnell for $200. So the invoice amount of 200, that portion of the invoice, 200, is being returned to us. So we need to return, record, I should say, the sales return. Again, that's the contra revenue. So when we compute net sales, we know that that $200 has to come off of the gross sales account in deriving net sales. Like the previous one, recognize that the credit that we give the guy is $232 because we're also crediting him for that portion of the sales tax associated with the 200, which is 16%. 16% of 200, 2 times 16, 32, you can see it right there. So that we have to reduce our obligation to the state by 32 because we don't owe the state money for money that we're not going to collect. Simple as that. So again, we reduce revenue with the contra revenue by the 200 invoice price. We negate the sales tax associated with that portion of the sale, and we give a credit which lessens the amount, which reduces the amount that is owed to us by Parnell, which is both the sales amount, the invoice amount, 200, and the sales tax amount. Okay, so we credit his account for both items. Now they tally up in the next one, the cash sales for, I don't know whether it's for 2 weeks or whatever. However, we take it from the cash register, so all that money's in there, and now we have to record it. And the summary, the summary of the sales were, there was lipstick of $1,200 and $192 worth of sales tax, so that the lipstick, we got $1,200 in the bank or in the cash register for the lipstick sales, including the cash amount paid to us. Again, we have that $192. In addition to that, we have $2,400 from the ticket price of the eyeshadow. So that gives us a total of $3,600 in sales, separated by department, $1,200 and $24. And then we are also holding the $384 in our cash register for the sales tax on the $2,400, which of course is the 16%. One more time, I'll show you. 2,400 times 0.16 equals, and there is your $384. So all said and done here, kids, we take the total sales taxes in the draw, which is the sum of 192 and 384. So if we take the 384 and add the 192, that's the total amount of sales tax that we have to record. We don't need to record it in a separate sales tax account because one check goes to the state. They're not concerned about how much lipstick and how much eyeshadow we sell. They're concerned with how much did we sell, period, and they take 16% of that. So all of which adds up to $41.76. Again, the two sales ticket totals and the sales tax collected. So we take those three amounts collected, 24 plus 12 plus 576 equals a total in our cash register of $4,176, which we add to our cash account by journal, and then of course into the ledger. All of these transactions need to get posted to the ledger. And then I think one final transaction and we might be done, or two. Okay, that's okay. We'll stay with it. Let me pause it just for a sec. Okay, the last two are kind of bang operations here. There was a sale on account of $550 plus 16% to Anne Marie Maxwell. There's the revenue. We added the 88, 16% of 550, total amount owed, sales plus sales tax. And then what happened right after that? 2 days later, Anne Marie Maxwell turned around and paid us the $638. So that makes things easy going out of this problem. So we're in and out with an account receivable from the sale on credit, and then the collection of that amount. Mind you, we are collecting the whole kit and caboodle here. We cannot keep that whole $638 because we owe $88. And so the last part of the problem is to show the accounts receivable ledger and show the activity that went on based on the transactions that we completed above. And you're going to see a very strong relationship between the accounts receivable subsidiary ledger and the accounts receivable account in the general ledger. This is called a subsidiary ledger. It's an individual ledger that shows the detail of an account in the general ledger, and it applies in many cases to receivables, payables, and inventory is another big area. But let's just review what happened here. We have the individual accounts. I'm not going to go back and forth, but remember Lois Kozak? We sold her, we debited accounts receivable, and then we gave her a credit of $290. You can back up and find the $290 credit and the $638 sale that we made to her. The balance of her account is $348. That's how much she owes us at the end of the month after all postings have been made. Same true with Anne Marie Maxwell. We made a sale of $1,856 and then $638. And remember, she paid us half of the $1,856, so we credited her account and credited it again when right after we made the sale to her on the 29th. There was a quick collection of the $638. So she still owes us the other half of the invoice from May 9th. So the balance of her account is $928. As far as Dave Parnell is concerned, we gave him a 50% credit over here, debit credit, so the word credit means something. Apply against the debit balance in his account shows that he owes us a total of $232. And Tennis Company, from that last sale, $638 was recorded on the 24th. And that is the balance in his account. Now, that's the subsidiary ledger. That's the grouping of all of the people that owe the company us. They owe us money. We keep track of how much is owed to us. And then at the end of the month, what we do is we prove that the total of the accounts, let me scroll down real quickly, okay? The total, if we took Kozak, Anne Marie, Dave, and Everett and added up the balances from their individual accounts, 348, 928, 232, and 638. Where are they? Right here. 348, 928, 232, and 638. There they are. We prepare a schedule of accounts receivable. This is a very, very common practice in general ledger accounting, that we prepare a schedule of accounts receivable and make sure we grab it from the subsidiary ledger, obviously, after all postings have been made. The balances are there. We put them into a schedule. We get the total of how much is owed to us, and then make sure that it proves to the accounts receivable account in the general ledger. This account is called the control account, controlling account. Accounts receivable control. 2146 is owed to us. These are the individual transactions that were recorded in the general journal. You can scroll back up and find each and every one of them and trace the posting to the general ledger account. Total of which is 2146, which is in agreement, and that's what we want to be. That's where we want to be. We want to prove that our subsidiary ledger agrees with the general ledger. The relationship is called The control account, okay, is the summary of the subsidiary ledger. The list, the grouping, or excuse me, the individual listing of the amounts owed to us are taken from the subsidiary ledger, scheduled off, totaled up, and at the end of the month, we go ahead and make a proof that the amount in that accounts receivable schedule at month end is in agreement with the balance in the accounts receivable account. I am going to cut it at that point, but these are all the postings. All the postings, if you trace one by one, you can find all of these amounts. I'm not going to review the transactions. We'll be here forever. Okay, but if you trace back, this is the general ledger, you trace back, you can see that each of the general ledger entries has to get posted to the ledger. But again, an important concept is the relationship between the receivables, in terms of the subsidiary ledger, okay, and the control account, general ledger. Accounts receivable control, accounts receivable subsidiary ledger. We keep the individual accounts out of the general ledger. If there were more accounts, like 100 accounts that were owed to us, and we try to stick them in the general ledger would get awfully messy. So that's why we keep them separate. Plus, it also gives us the opportunity to analyze each of the amounts to see how old they are, see who owes us, how much, for how long, for billing, for bill collecting, as the case may be. Thank you. This has run a virtual class lecture, but I hope you have learned from it. Go back and forth at your will.